Hello traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for February 17th, 2019. Sorry, I had to look at the date. Anyway, I hope you guys are having a great weekend. If I sound a little under the weather, I am. I don't get sick often, but sometimes it creeps up on me. So if I have some sniffles, I'm going to apologize in advance. All right, before we get into this week's week ahead video, I wanted to announce a couple of things. First of all, if you're in the New York area and you're going to be if you're going to be around New York in the area March 10th through 12th, make sure you attend the Traders Expo in New York. Steve from Athens, Greece is flying in. Joe is also going to be there, and possibly Grega, possibly myself. I haven't committed just yet, but if you want to go, it's free. And then we're also organizing a meetup there for the ForexAnalytix community, and you guys and gals are more than welcome to show up. So make sure you let us know that you're going. All right, and if you haven't tried out ForexAnalytix, remember it's only $1 for 10 days. $1 for 10 days. Try it out. Watch the little video here up top, so you can see what ForexAnalytix is all about, and then make sure you download the mobile applications or the tablet application, just so you have all of our analysis at your fingertips. Also, don't forget, we have a giveaway for our favorite trade setups, and to submit that, all you have to do is email a video or a picture to support@forexanalytix.com. If you remember last week's week ahead video, I showed you a video of my trade setup. We want to see the same thing from you, and we're going to highlight that on our blog on ForexAnalytix. There are going to be two winners. One winner is going to have it's going to be selected by the team, and you're going to receive a bunch of ForexAnalytix gear, a 6-month semi-annual subscription to ForexAnalytix as a prize, and then we're going to have one random winner that's going to receive all the ForexAnalytix gear and a semi-annual subscription. Then we're going to have 3 runner-ups that will get 1-month subscription apiece. So remember to submit a picture of your trade setup. It's at support@forexanalytix.com. It doesn't have to be the biggest or the best or the coolest technology. It just has to be the one that fits your particular trading style and how you do business. So we want to see those from you. And remember, watch last week's week ahead video if you want to see what my trade setup looks like. Okay, now I also wanted to mention that this next week is going to be a little tricky as we get into the analysis here. I want to talk a little bit about the choppiness that we're seeing in the markets. If you look at the euro dollar, let's see, this is the euro. That's a weekly chart. Here's the daily chart. We look at the last 5 days worth of price action. I mean, you know, we really just kind of have been consolidating below this channel support. Now, this channel support's actually relatively important, and I'll tell you the reason why. Let me take you over to my charts really quick. That consolidation that you see there is below a multi-year trend line. This is January, or you can say December of 2016, but January 2017, and you can see that trend line comes through right through the bottom of this channel, right? So there's your channel here. It looks something like that, okay? And we broke below it. We've consolidated below that trend line, and we've probed these lows around 112, 112.50, 112.60, and we didn't quite make it to 112 yet. But we're not rallying above we're not taking out the trend line once again. So with that being said, you're going to have to be very careful this week. I know I am, and you know, unless we get above 113.50, it's really difficult to be bullish the euro. The flip side is, you know, we got to be a little careful being bearish, because you can see that the euro is being bought, you know, on dips below 112.50, and this has been pretty key support all of the end of last year, and so it is tricky. Now, there are some things that are happening this week that may dislodge this price action. First and foremost, we have FOMC meeting minutes, which will happen on Wednesday, and on Thursday we have the ECB monetary policy meeting minutes as well. So we have meeting minutes between the FOMC and the ECB on Wednesday and Thursday. So that, like I said, that might dislodge the market. But there's a couple of other issues. So I'm going to show you really quick, and this is really just regarding the euro. This is the daily sentiment index. We subscribe to this, and we pull out these numbers if we see anything that's relatively important to for our traders to see throughout the course of the week. And it's something, like I said, ForexAnalytix we subscribe to as a company. But you'll notice here the euro, it's at 14, which means it's a fairly extreme bearish sentiment reading. You can see when we were down at 9 on Wednesday, the euro dollar actually popped back up. We were at 9 going into Wednesday, and then we popped back up on Thursday because the daily sentiment index got a little too extreme. So that concerns me a little bit, because if the euro actually breaks down, the DSI might be at 10 or 9 or 8, and when you're below 10 or above 90, those are extreme readings. That means everybody's really bearish if it's 10 or below. If it's 90 or above, everybody's extremely bullish. That's not necessarily an automatic go the other direction, but it does raise some concerns from a contrarian standpoint. So I think about that, because if the euro does break through the support and it challenges 112, it's like, how much downside are we going to get before we get a snapback, counter trend rally, if that happens? Okay, and I do think that the risks are increasing that we break back above 113.50. Am I bullish yet? No. Does that mean that I won't turn bullish? Oh, I could. Like I said, we get above 113.50, and I'm gonna consider going the other direction. As far as the dollar goes. All right, and so that's the euro. I wanted to point that out. Now I'm also going to let me take you over to the dollar index really quick as well. The dollar index, we pivoted off the 200-day moving average that, I can't remember if we talked about it on the week ahead video, but I know I've been discussing it on a daily basis on the free face webinars that we do every single day. I know I've talked about that a lot when we hit the 200-day moving average, when we hit this trend line support. We rallied sharply off there, but you can see the price action this week. We're stalling at the 88% retracement, but we're also holding the triangle break. We're holding at 96.70. We dipped down there on Tuesday, Wednesday, and then we pop right back up again. And so this is, as far as the dollar goes, as long as we are above 96.70, it's hard to be bearish. But at the same time, if to be a dollar index bull, I'm gonna have to see us break above this big resistance here at 97.70. Now, if you zoom out a little bit, you'll notice that that's going to be a pretty big resistance, and I believe, if I'm 100%, I think I'm 90% sure here, this high to this low is also the 618 retracement, and it is. You can see the 618 retracement. That's how important the dollar index is around this 97.70, 98 level. Now, if we break these highs, and let me zoom this out here, or pull it out there. So if we break these highs, I mean that'll clearly give us the indication that the dollar is going to continue to rally. And the problem that I have with the dollar at this point in time is I can argue either situation. I can argue being a dollar bull. I can also argue being a dollar bear. So that is a, that's a conundrum when you can argue both sides. And I think that's why the dollar index is kind of, stuck here. I think the market can probably do the exact same thing. And so right now, I think you have to wait for a break below this 96.70, break above 97.70 or 98, and then that will give us a good indication of which direction to go. Now, I also want to talk a little bit about the equity markets here. The equity markets continue to rally. We're above the 200-day moving average. We closed at the highs of the week. Now I'm going to take you over to the DSI again. So here's the DSI. Notice that the S&P is at 88. That's a pretty extreme reading for the S&P. It's getting up there. Now I've seen it well above 90, and I've seen it stay above 90. So it's not super extreme, but it's getting there. Look at crude oil. Crude oil is also at 90. Again, those are pretty bullish readings. So with the S&P at near 90, crude up or at near 90, you got to look at the dollar yen, and the dollar yen's already starting to struggle as we approach that 200-day moving average. The dollar yen, which is a great proxy for risk assets, has already started to turn lower. You can see on Friday, if you look at from a candlestick perspective, this is like dark cloud cover setting up, especially if we get some black, or you can see color wise it'd be red, but we call them black or white candles because that's charts used to be in black and white. So white would be bullish, black would be bearish, yada yada. Anyway, we have this ascending wedge here, and if we start breaking lower in the dollar yen, that's going to signal to me that the S&Ps may be ready to turn over. Risk assets might be. And then if you take a look at crude oil, crude, we closed stronger on Friday, which is pretty common. At the end of the week on Fridays, crude usually has a strong day, but you can see just 2 weeks ago, we had a rally right into resistance on Friday, and then we slumped the next week. I mean, we're pushing right into big, what I call resistance level in crude. A lot of people looking at this inverted head and shoulder pattern. Let me see if I can free draw that. Yeah, here we go. Like a inverted head and shoulder pattern looks like that, right? So it looks like it wants to break out, and we're at a 38% retracement right here. There's a 38% retracement right there. This red line here. So you gotta be a little careful with crude, because we've showed failure here before. But if that moves lower, let's say, you have the dollar Canadian that's in a nice little uptrend, which is also, FYI, setting up a little possible inverted head and shoulder pattern. So if crude decides it wants to head lower, the dollar Canadian could head right back up into this channel, which is possible. Okay, now there's a couple other things that are happening this week that I think you should pay attention to. Like I said, we have meeting minutes for the Fed, and also for the ECB, but we also have Australian monetary policy meeting minutes, which is Monday night if you're here in the US, which, by the way, Monday is going to be the President's Day holiday. We are going to be broadcasting just for an hour. We're not going to have our normal interview, but there will be a normal broadcast tomorrow, just so you guys know. I am filming on Sunday, so it's going to be tomorrow. But again, meeting minutes for the Aussie dollar, or for the RBA, that's going to be on Monday, and you can see the Aussies kind of bear flagging a little bit. We also have employment data out of Australia Wednesday night or Thursday morning if you're in Australia. Okay, we also have UK employment data Tuesday morning, and then on Thursday morning we have a lot of European PMIs, which are going to be watched very carefully, because PMIs globally have been slowing down. And if you look at like the Eurozone services PMI, we are dipping below 50, which is a contraction. Those are contractionary numbers, and they are expected to continue to worsen. So if you start seeing those manufacturing PMIs that are getting really close to 50, especially in like Germany, you know, that's a risk to the euro. Remember, we will have European meeting minutes that morning as well. That's going to be Thursday morning. We also have durable goods out of the US, Philly Fed numbers on Thursday, and then Friday we have Canadian retail sales and a lot of Fed speak on Friday as well. And we have ECB Draghi is also speaking. So there is a lot of there's a lot of data happening this week. A lot of meeting minutes from several central banks. Matter of fact, Mexico's central bank will also have their meeting minutes this week. There's two new committee members that have been selected by the new administration as well, so it's going to be interesting to hear what they have to say. So guys and gals, remember the dollar, we are in a really tight range. It was very choppy last week. Be on the lookout for a breakout. Volatility has been really low in the FX, but I expect it to break out soon. I think volatility in the markets in general should be picking up in fairly short order. So if you guys and gals found this this video to be beneficial, make sure you hit the thumbs up button. Yeah, do it for me. I'm not even feeling that great, and I'm still filming these videos, and the reason why I do that is because I hope it really helps you guys out. But if you want to encourage my whole team, click the thumbs up button, and then also subscribe to our YouTube channel. Click the bell icon so you don't miss any of our videos as they pop up throughout the course of the week. And guys and gals, my name is Blake Morrow. I hope you have a great trading week. Talk to you soon.